Hello everyone, today's video will be the start of a three-part series where we're going to be going through the ICT daily profiles. The aim for this video is to give us a better understanding of how the daily candle moves and what to expect and how to react when the market offers various price action structures in order to determine scalping and intraday trades that have high chances of profitability. In this video, we're going to be going through the London reversal and New York continuation daily profile using 3 examples on EURUSD. This profile usually pans out after the London session opens and takes out the Asian session's high or low, and then after forms a market structure shift or a change in the state of delivery. It is also important that we keep in mind that if the Asian session's high or low is taken out before 2 a.m., that is the London session open, whatever setup or formation that may be evident in the market has lower chances of being profitable. In the first example, EU traded into a weekly fair value gap denoted by these two horizontal lines. This is the premium level of the fair value gap, and this line represents the discount level of the fair value gap. Notice that on this day, the Asian session's high was taken out before 2 a.m., which brings us back to what I've said before. If the Asian session's high or low is taken out before 2 a.m., the setup is invalid, which means we shouldn't be looking to take any trades until the ideal setup occurs. When the Asian session's high was taken out before 2 a.m., this should have automatically been a red flag for us and indicate to us that we should wait for a proper liquidity purge which aligns with our daily bias to occur. In this case, we had a bullish bias, which meant that if we wanted to see a valid liquidity purge, it should be on the sell side. EU took out the Asian session's low, which was our Sellside Liquidity, and then gave us a market structure shift right over here, which also had a fair value gap. This fair value gap was our entry point, and the stop loss was placed just below this low. As you can clearly see, the London session gave us the low of the day, and New York session gave us the continuation to the upside. In the second example, we can see that the daily market structure was indecisive in terms of peaking and expanding into one direction. However, if we use the same logic as the previous example, there was still a chance of taking a profitable trade. The Asian session's high was taken in this case after 2 a.m., which means that if we then have or see a market structure shift or a change in the state of delivery with a fair value gap, there shouldn't be any hesitation to take a trade because the odds of it being profitable would be high. As we can see, after the Asian session's high was taken, we then had a change in the state of delivery and saw EU trade into the fair value gap during the New York session and gave us a continuation to the downside. In the last example, the Asian session's low was taken out before 2 a.m., which means we shouldn't consider it a valid liquidity purge. Later on that day, EU took out the Asian session's high and then created a change in the state of delivery right over there, which also had a fair value gap. New York opened while EU was trading within this fair value gap and then gave us a sell continuation to the downside. That is it, ladies and gentlemen, for this video. Stay tuned and see you next time.